In case you guys missed the community post, Realty Income raised its monthly dividend. So Realty Income declares 0.2545 cents per share monthly, which is a 2.4% increase from the prior dividend of 0.2485 cents. Pretty sweet dividend raise, especially because we were not expecting Realty Income to declare a dividend raise for this month. Ex-dividend date is February 28th, and they will be paying out March 15th. So congrats to all the Realty Income shareholders. The next one this one was actually on our list for the companies we were expected to get dividend raises for in the month of February. Cisco ended up hiking its dividend. So Cisco actually declared 39 cents per share quarterly, which is a 2.6% increase from the prior dividend of 38 cents, which is about a 1 penny raise. Ex-dividend date is April 4th, and they will be paying out April 26th. The last one we do have here, guys, is Coca-Cola, which also raised its dividend. Probably a lot of Coca-Cola shareholders, but Coca-Cola ended up declaring 46 cents per share quarterly, which is a 4.5% increase from the prior dividend of 44 cents. So they did raise their dividend about 2 pennies. Ex-dividend date is March 16th, and they will be paying out April 3rd. So congrats to all the Coca-Cola shareholders. What's up, everybody? It's Investing Sensei bringing you episode 174 of the portfolio update. So hopefully you guys are doing awesome. I definitely am. You guys already know it's Sunday. It's time to go over the portfolio, how the portfolio performed this week, what we bought, what we sold, what options we sold, what options we're managing, what dividends came in, and just in general, how much we grew the dividend snowball, guys. Because remember that every single Sunday we come back, we actually kick off the scripts, see how much we actually increased our dividend snowball, because we continue to dollar cost average into the portfolio no matter what the market is doing. And by the end of the video, we should see this projected monthly dividend average much higher. Definitely excited. We are going to try to get this to $325 per month on average. Remember, guys, that we're actually working on Q1 of 2023 for the dividends. Definitely exciting seeing how much we can grow this. Hopefully we can surpass Q4 of 2022. That is the overall goal every single time. Again, annual dividends so far for 2023, we're doing fairly well. We're at $283.41, completely passive, guys. We had to do absolutely nothing. Our money actually went out and worked for us, completely passive, and that is what we want to achieve in the long term. And if we look at the options premium, which actually does require a little bit more work, this is not very passive, but so far for February, we were at $570.92. Pretty impressive. Not as impressive as January, but guys, on an average we are trying to get I believe about 400. Let me actually pull up the goals, because we do want to stay focused on what we have set for 2023, which actually our first one is to reach 20,000 subscribers, which is actually we're gonna try to see if we can get it. I'm not sure if we will, but if you're new to the channel, consider subscribing with that notification. You would definitely contribute to goal number 1, and then goal number 2 is to try to get to about $325 per month on average each quarter. I think we'll definitely achieve that. Definitely not worried. That is within our control, so I will make sure that we achieve that. And then goal number 3 is to reach $118,000 invested of my own money. Actually, here I did forget to add that, so let me add that real quick. So I actually deposited $140 this past week, and I forgot to actually fill out the spreadsheet, but you guys can see that we actually went to $110,821.84. We have about maybe $7,000 and maybe $200 to go. I'm pretty sure we'll definitely achieve that. Goal number 4 is to dollar cost average $100 every single week at a minimum. I contributed $140, and that is because $100 to continue to dollar cost average. And then goal number 5 is to actually contribute an additional $20 every time a company paid us out a dividend. We actually got 2 dividends this week, so I ended up depositing an additional $40 so we could actually reinvest back into those companies and just give it a little boost. I do have a subscriber that contributes $5, and another one that does like $10, another one that actually buys an additional full share. They get a dividend, so that's pretty impressive. One day we'll get to that. Goal number 6 again is to try to get to about $400 per month on average selling options. We're definitely already surpassing that, so that's very, very awesome. But we're gonna, over the long term, I'm not expected in the coming months to continue to keep that trend. So on average it should come out to about 400. That is the minimum goal, and I'm going to try to stick to that. We'll see what happens. If I show you guys here the dividend payout, which will actually kick off later down the down the video, you'll see that we actually have one more dividend for the month of February, which is Starbucks, and then we'll start off the March dividends, which is very awesome. Remember, we did get the waste management dividend increase, so definitely happy about that. But yeah guys, let's go ahead and jump back over here, which we can go ahead and get started with the video. Alright guys, so we can go ahead and get started. I actually wanted to cover one more thing in the portfolio video update, which actually I'm going to be going over a little bit about covered calls. I know some of you guys have been interested about it, so hopefully I can give you my perspective and we can walk over one of them, and maybe it might make a little bit more sense. And then if it doesn't make more sense, or there's a couple other things that you want me to go into a little bit more detail, I can do that in the future video. So definitely just let me know in the comment section. Definitely appreciate your feedback, and definitely want you guys to learn, because selling options is a great strategy to generate additional income. But anyways, you'll see the portfolio is at $195,572.99. We are up about $53.78, which is about 0.03% in the green. Overall, the 2-year change actually is showing out to be about $7,462.75, which comes out about to be 3.97%. Very, very awesome. Definitely seeing the green now. And then again, a couple months ago we were in the red, so different feeling there. If we look at the gains, we are up about $53,307.20, which comes out to be about 61.38% in the green. Very, very awesome. Cash balance, we have quite a bit of cash balance, which is actually $55,413.30. I am actually planning to deploy some of this cash into SCHD. You'll see next week I will be purchasing some, especially because I can, if I scroll to the very bottom, if you've been following my updates every Sunday, you remember that we did have some cash secured puts on SCHD. They're actually gone now, and that is because they did expire worthless, so we got to keep all that premium. I think it was like $400 or $500 they paid us on those cash secured puts, and we got to just keep that, and then we got to keep our $55,000. So we can potentially sell some more cash secured puts and see if we get assigned 100 shares of those, but we will see. I prefer to start actually accumulating SCHD just because I do want to get the dividends from them. But real quick, first thing I want to show you guys here on the positions is that you'll see that I actually have 2 covered calls on Apple. 4 actually is going to expire about a month away from now, so that's actually going to expire on the 24th of March of 2023. I did go up to about $140 strike price, and we'll see what happens with this one. So we're just going to manage this one because I am deep in the money on this one, and Apple's actually trading at $152.55. So we will see what ends up happening. I think Apple should probably have a pullback, but we never know in the stock market. But JP Morgan here, we also do have a covered call on JP Morgan for actually next week on the 24th of February, about $145 strike price. You'll see JP Morgan's trading about $142 or so. Same thing for Altria. We have another covered call for Altria, which expires on the 24th of February, which is actually next Friday, for a strike price of $48. This one is, we are actually a little bit in the money, so this one's about $48.07. We're gonna potentially manage this one. We'll see what happens. The next one we do have is Microsoft, which we also have another covered call for it, which is till the 24th, which is next Friday, for a strike price of $262.50. You'll see that Microsoft is trading about $258.06. Microsoft has been going upwards and it actually did a recent pullback, so we'll see by Friday where it's at, if we'll have to roll it or we'll get this covered call to expire worthless. But so far we are out of the money on this one. And the last one we do have here is Nvidia, which we have a covered call that will expire this Friday as well, which is with a strike price of $157.50. Nvidia, we are quite a bit in the money on this one. It's trading about $213.88. So we're going to manage this one. We're definitely going to have to roll it and we'll see what happens with this one. Hopefully we can roll up in time as well in strike price so that we can eventually roll out of it. I would prefer to not actually get my shares taken away because that will create a taxable event. We are up quite a bit on our positions or our shares, about 400%, almost 500%. So definitely would love to not get my shares taken away and create those taxable events. But you know, I am okay with getting assigned at $157. Because whenever you sell covered call, you want to make sure that you pick a strike price that you wouldn't mind letting those shares go in case the stock does start moving upwards. And then you'll see the other positions I do have here. We're trying to get these to 100 shares so that we can start selling covered calls in the long term and start generating even more income. So we'll see what happens with that, guys. If I show you guys here the performance, you'll see that for the gains, we're actually up in the green, guys, $2,914.63. And that's actually this little spike right here, this green part. I haven't really seen it in a while now, so it's very different view here. We've always been in the red for us, and that's awesome to see. If we look at the rate of return, we are up actually 1.35%, and we are up now. So in the long term, we will be up. In the short term, we could have a huge pullback. The portfolio could go down, and we're going to use that as a great opportunity to accumulate even more shares into the portfolio, because in the long term, our future selves are going to be thanking us. So definitely will take advantage of that. If I show you guys here the investment income, we're currently projected to make about $2,556.97, which comes out about to be $213.08 per month on average. If we look for the month of March, we're projected to make about $256.95, and then April about $274.47, and then for the month of May about $107.01. We are accumulating quite a bit of interest, especially because we have those $55,000 that are not invested yet, but we are generating some type of income on them. And then guys, if I show you guys here the history, you can see that we do have it to start from February 13th of 2023 all the way till the 19th. If we scroll to the very bottom, I can actually show you guys everything that we ended up doing. So on the 13th of February, we actually got a dividend from Air Products and Chemicals, which I am no longer invested in it. So we did collect $3.37. I did end up, reorganizing my portfolio and trying to make it much leaner and allowing it to generate even more income. But great dividend here. Because we did meet the ex-dividend date, and we did stay on the books for actually getting that dividend payment. But you'll see on the 15th of February, we actually got, we deposited $140 to continue our goal of $100 per month on a minimum, and then $40 because we did get 2 dividend paying companies in our portfolio. You'll see that we did get a bank interest on those $55,000, about $20.95. On Apple, we did end up getting a dividend on the 16th, which we collected about $50.02. Very awesome right there. That was completely passive, and I love that. The next one here we do have is we actually ended up doing a buy on Costco. So $20 worth of Costco, $20 worth of Apple, and then I bought 1 full share of Target here, guys. and trying to get target to 100 shares, we can start selling some covered calls and enabling some more income or additional extra income towards the portfolio, so that that snowball can get faster, larger and larger, much faster. Alright guys, so here's where the major stuff that we ended up doing. So you'll see here on the 17th, I ended up actually rolling my Altria covered call. So I did a buy to close, so I closed my position that I did have. I had a covered call for a strike price of $47.50, which was that expired on the 17th. I paid about $17.65, and then I did a sell to open. I did a covered call for a strike price of $48, which I went up about 50 cents. And then this one does expire next Friday on the 24th of February. So they paid me about $21.35. So I made roughly about $3 from this roll. We'll see what happens. That means that our shares did not get sold on the 17th of February. So that was pretty awesome. That's kind of what the roll saved us from. And potentially if Altria has a pullback next Friday or this coming week, we could potentially exit out of this covered call. And it's just all about managing these options. If we look at the next one for us, is we actually did a buy to close. Well, we did a roll. We bought to close the JP Morgan covered call I had at $145. That expired on the 17th. I paid $1 to actually exit that, and then I did a sell to open a covered call on JP Morgan. So I did the same exact strike price of $145. I just went out further out till the 24th of February, so about 1 week. They paid me about $30.35, so I made roughly about $29 if you subtract the $1 I paid to exit. And then the next one we did do was the Apple covered calls that we did have. So I ended up doing a buy to close twice. We did the covered call 138 strike price of Apple that expired on the 17th. This one was super deep in the money, so this one we would have gotten our shares taken away if I didn't roll this. But we ended up paying $1,371.65. You'll see we did the same one because I do have 200 shares of Apple. And then we did a sell to open twice, so right here and then right here. And that was a covered call on Apple for $140 strike price that expired on the March 24th of 2023. So that's roughly about 1 month away from now, and we went up about $2 in strike price, hoping that we can actually get out of the money on these covered calls from Apple, especially if Apple does have a huge pullback in March. We'll be able to have this become very, very profitable. So we have about, they paid us about $1,388 per covered call that we did end up rolling, and that's roughly about maybe $16, so about $32 in total we made from this roll. Not a huge lot, but again, we are in the money on these, so we'll take what we can. The next one here is on the 17th of February. We ended up getting the dividend of Costco of $10.13, and then we got the drip from Apple, which actually bought about 0.32 shares of Apple. Very, very awesome to see, and we're gonna eventually have this to the point where Apple ends up buying 1 full share every single time. Can't wait till we get to that. But let's go ahead and see how much we made in total dividends, completely passive. I have this green button, click on it. This adds up all the dividends for us, and we made $63.52 in passive income. Can't get any sweeter than that. Definitely always look forward to collecting passive income here. But yeah guys, this is the history. Let's go ahead and actually talk to you guys about a covered call so that you can guys get a little bit of an introduction to it. So let's go ahead and jump over there. Alright guys, so I'm here at Investopedia, and we have the basics of covered calls. We'll read a little bit quickly, and then I can show you guys an example. A covered call involves a seller offering buyers a call option at a set price and expiration date on a security that the seller owns. Professional market players write covered calls to boost investment income. Individual investors can also benefit from the conservative but effective covered call option strategy by taking the time to learn how it works and when to use it. one of the things that I kind of want to cover here is kind of like the textbook definition of this. What is a covered call? You are entitled to several rights as a stock or futures contract owner, including the right to sell the security at any time for the market price. Covered call writing sells this right to someone else in exchange for cash, meaning the buyer of the option gets the right to purchase your security on or before the expiration date at a predetermined price called the strike price. A call option is a contract that gives the buyer the legal right, but not the obligation, to buy the shares of the underlying stock or one futures contract at the strike price at any time on or before expiration. If the seller of the call option also owns the underlying security, the option is considered covered because they can deliver the instrument without purchasing it on the open market at the possible unfavorable pricing. So this is very awesome. This cash that you do receive is what we end up calling the premium, which is kind of the stuff that you guys have been seeing that I do collect, which if I go back up here to the history, this is that premium that we do collect, the $1,388. That is the premium that we do collect. But again, I am in the money on these, so I've been rolling, so I have to pay this out, and we do keep the difference. But in general, if you're just selling one covered call and you didn't roll it, you would get to keep that full amount. But one of the things I want to show you here is I do have Microsoft on Schwab. So if we click here on the options, I want to go over an example. And hopefully this makes a lot more sense, because sometimes the textbook portion is a little bit more confusing. One of the things I want to show is I'm actually going to go to the Greeks, because that's kind of what we want to show. So you'll see that this is actually the February 24th, 2023. We're actually about 5 days away from that or so. We're actually on the 19th, I believe. But anyways, it's a weekly is what they call these. We could go to March 3rd, and that would be 12 days away. But we're just going to stick to 1 week. So let's say that currently Microsoft is trading at $258.06. The way we do a covered call, this is your options chain. So if we look at the left, this is your calls, and then if we look to the right, this is your puts. So the center part is your strike price, so that means the price. Since we're doing covered calls, that means that we do have 100 shares of Microsoft. In our case, let's assume that we don't believe that Microsoft would reach by the 24th of February, which is 5 days from now, that it won't reach $265. That means that we can sell a covered call at a strike price of $265. The goal with the covered calls generally is that you want to pick a strike price that you don't think the price of that stock will reach by that expiration date. So in our case, let's assume that we don't think Microsoft will reach $265 on Friday. We think that it'll probably be below it. That means that they will actually pay us out. So if we were to sell it, a covered call, they would pay us 88 cents. One contract is actually 100 shares, so you're controlling 100 shares. So these 88 cents, you would actually multiply it times 100. That means that you would get paid $88 as your premium or your cash to give the buyer of that call that you sold the right for them to sell, purchase your shares at $265. So one of the measurements or the Greeks that we use here is delta. So you'll see that this is 0.20. You can actually subtract 1 minus the delta, which is 0.20, means it'll give you 0.80, meaning that is an 80% chance that this will expire worthless. This typically kind of what I use it as. Some people actually stick to 0.05, which means there's a 95% chance that this will expire worthless. As you'll see that the further you move out in the strike price, you'll see the delta does decrease, meaning that this would be 1 minus 0.13, meaning that this would be about 87% chance that this would expire also worthless. So there's a higher chance that since you're moving further out, that Microsoft won't reach this price by that expiration date of the 24th of February. So that is kind of what a covered call is. There's a couple things that can happen here. So let's say we sell the 265. So immediately we will get the $88 towards our account. We'll keep our 100 shares, but by the 24th, if Microsoft closes above $265, then our shares will get sold at $265. We still keep the 88 cents, and then we get the cash from the sell of $265 for the Microsoft. The next thing, let's say that Microsoft does close below $265. That means that we actually end up keeping our 100 shares of Microsoft, and then we actually keep the 88 cents or $88 premium. So that is kind of typically what you kind of want to aim for, especially if you're a long-term shareholder of that company and you don't want your shares sold. The other thing is that you want to make sure that you always pick a strike price that you wouldn't mind letting your shares go, because you know, at one point there's so many different factors that happen, and it could have your share price go upwards, and you just gotta make sure that you want to let it go at that price, because otherwise you're gonna regret it. But the other thing you can do is roll your options, which is kind of what I'm doing now, because I am kind of in the money on some of these, and we're going to continue to manage them. But in general, that's kind of what a covered call is. We're just collecting extra income by kind of almost you know, gambling, but we're on the casino side. We actually won't lose really any money, because the worst thing that can happen is that our shares get sold. We make the difference in our capital appreciation, plus we keep the premium. So it's, I think to me, it's a win-win situation there. But yeah, that is kind of what a covered call. Let me know what kind of stuff you want me to dive into. I'll be happy to do so. Any details you want me to, and definitely can eventually make a video on that for you guys. But let's go ahead and wrap up this video by going over the portfolio and see how much we grew the dividend snowball, guys. So you'll see we already have a copy of this over here. Let's go ahead and go over here to the options so I can kind of show you how much we made for this past week. So you'll see that on the 19th, or the week of the 19th of February, we made $66.39. Not quite a bit compared to all the previous weeks. That is because some of the contracts we are still managing. And you'll see in total, though, we are up to $3,139.99. For the month of February, we're up $570.92, which I'm still very happy about, and hopefully we can continue this trend upwards, because it's definitely going to allow us to continue to grow that dividend snowball much faster. If I look at the dividend payout here, guys, we can go ahead and actually kick off these scripts. That way we can see if any new companies announce dividends within our portfolio. So 41 here, we'll go over here to portfolio tools, click get latest dividends. I do have these scripts available for free, guys. All I ask in return is that you're subscribed with that notification. Definitely would appreciate it if you drop the big thumbs up on the video as well. But actually no companies actually announced the dividend for us yet. But if we go over here to the settings, we can go ahead and actually get rid of this, and we can jump over to personal capital, which is actually changed to Empower, I believe, and we can get the latest version of our portfolio holdings from this past week, which contains all our purchases. So I'll see you guys over there. Alright guys, so we're at the personal capital, or I guess Empower personal capital. Under the Schwab account, you'll see this green button. It's called Copy Holdings. Click on it. This actually copies the content of my portfolio, which contains all the purchases, into the clipboard, which I can jump back into, right click, paste special values only, and there we go. We can actually go over here to holdings, and if you go to portfolio tools, get latest, click on update portfolio holdings. This will get wiped, and it'll use the new version we just pasted. It'll parse it out and stuff. It'll be very, very nice. Click on it, so then we'll see it. Here it goes. And let's go ahead and go here to the dashboard. Everything's getting calculated, and hopefully it's done soon. So it looks like it is. Dividend yield, guys, here is at 1.18% compared to last week, which is the same. Dividend yield on cost, it actually went down from last week, so I'm not sure what happened here. It's 2.66% compared to 2.70%. But on the yearly, guys, we're projected to make about $2,309.16. So we went up about $5. On the monthly, we went up to about 41 pennies. So that's pretty awesome. And then on the week, we're actually making pennies more on the week. On the day, we're actually making 2 more pennies every single day. On the hourly, we're still making 26 cents every single hour in our hourly work wage. This is if our portfolio was to work a 40-hour work week. The hourly rate, it would be at $1.11. We're gonna eventually try to get this to minimum wage. We'll see how long that takes, guys. But yeah, guys, this is actually all I have for you guys. Make sure that you're subscribed with the bell notification if you have not done so already. As well, drop a big thumbs up on the video, definitely would appreciate it. And if you stuck all the way to the very end, go ahead and drop a hashtag covered calls, because it's a great way to generate some additional income by taking a small risk and allowing us to grow that dividend snowball much faster. Let me know what your thoughts are on covered calls, and if you want me to dive into any specific things from there, hopefully I helped you learn it a little bit more. Hopefully it made a little bit more sense, and if it didn't, I'll make another video for you guys. I actually want to make one full dedicated one for you guys, so it just stays to that. But I kind of wanted to cover a small bit here on the Sunday portfolio update. But yeah, this is actually all I have. So I'll talk to you guys later. Take care, stay safe out there. Bye, guys.